A place for information and talk. Power 98.7. Now we're talking.
So we speak every night about this on the show, the price of gold and increasingly copper, telling such an interesting story. We speak to Craig Brewer, who is a managing director at ABSA's Corporate Investment Bank, to understand some of the shifts that are taking place around copper and gold on the continent. Craig, good evening. Thanks for joining us on Power Business.
Thank you, Tehillah, for this opportunity.
So there's a lot of interesting factors taking place in Africa, which really has all the resources in the world that the world needs, but in particular about gold and copper. And we've seen the massive price increase in gold and copper, also a steady increase as well. Let's talk a little bit more about the way that capital is reacting and investment is reacting to gold and copper on the continent.
Thanks. Let's start off with copper. And in fact, copper and gold are the two commodities where you have the best line of sight in terms of demand and at times pricing. In terms of copper, that is necessary for the entire energy transformation and for all existing electronics and developments as we now stand. So as we go for this transformation, there's more and more demand for copper. And you've seen that Africa is a resource base, and in particular in Zambia and DRC, that's where the copper is found in Africa. And one thing I have mentioned before, and it's worth noting, is not just electric vehicles, which will always come through. They may have dipped a bit post-Trump, etc., and some of his reduction in those tariffs and taxes. But if you look at all these data centers and AI and what is required in terms of processing power, and they all use a significant amount of copper. So you've seen that the demand for copper is such that there is actually a marginal deficit at the moment. And whilst copper in Latin America, in Africa and the like is being produced at increasing rates, it is not necessarily at the level that it is being used. There are a lot of surplus supplies in terms of above surface. But if we happen to have a global move upwards in terms of economic activity, the copper demand comes through very clearly. It is a big barometer for global GDP.
I mean, we saw that recently with Jubilee Metals selling their assets in South Africa for Zambian copper mines.
Correct, and that you can see is a very focused strategic move. Chrome and platinum are, from a perspective in terms of their strategy, were ex-growth. There's significant profits in those businesses, but they've been around for a long time. They started off with some tailings operations in Zambia and have moved into smaller mining their own resources. And the view from shareholders was that, let us see, in light of where copper's going, you've seen these massive mega mergers of Teck and Glencore, etc. The upside in terms of a dedicated copper producer like a Jubilee is significant. And that's why shareholders pushed and voted for that.
Now, gold is also so interesting, of course, because its use is not just utilitarian. It's also seen as a hedge. It's a reserve currency. It's used by central banks as well.
Correct, and that's why you've seen in the last 2 years the massive increase. I think it's over 150% from around the $2,000 an ounce mark to now 4,400s. Yes, there's geopolitical risk underpinning that. There's been this move, as you mentioned, of central banks picking up reserves in terms of reserve currency. But remember, with gold, one of the key aspects is that there is no counterparty risk if you have the physical gold. If you buy dollar bonds or country bonds or equities, etc., there's always the possibility of a counterparty running into difficulty. If you have gold, and we're talking physical here, in your country, there is no counterparty risk. And that is why it has this underpin in terms of volatile times. And I don't think, from a global perspective, the volatility is going to end anytime soon.
It certainly seems that way. So then what's the way that investments are treating these two minerals on the continent? I mean, here at home, we saw the first underground gold mine opening in 15 years west of Johannesburg, but we haven't seen that much other investment into gold. There's been a long period of mining companies not wanting to sink new underground infrastructure in South Africa, certainly.
If we look at Africa as a continent, you've got West Africa, and that corridor is flourishing, with Ghana being the lead there. So there's a significant amount of investment going in there. All across West Africa, there are always some concerns with Mali, etc., and things like that, where tax and regulatory regimes change. But on the whole, there is capital being allocated to West Africa. In terms of South Africa, remember, we're an older gold mining country in the sense that many of our reserves and resources have been mined out. But as you mentioned, Westwits, that's the Australian-listed ASX company, has raised equity and project finance debt to develop that mine just the other side of Soweto. And so that's pleasing. If you look at the local miners, Harmony, DR, Pan Africa, Goldfields, etc., Sibanye, they have older mines, and some of these extremely deep.
Some of the deepest in the world, right?
Between 2 and 4 kilometers underground. So there's huge risk. Your all-in sustainable cost can be a bit higher because of all the logistics necessary, but there is still capital going into South Africa in terms of possible new projects. I mean, Sibanye-Stillwater has turned around and said they are reviewing their Burnstone project. All the other mines are looking at their reserves and resources in light of this new higher gold price, because remember that they do their economic assessment of the profitability of committing funds over a 8 to 15-year period at various gold prices. So the more confident you are at a gold price of, say, above $3,500 over the longer term, the more resources you actually have that can be explored and extracted. But it does take, you have to have confidence as to the longer term gold price. But there's still a significant amount of gold in South Africa, and people are looking at greenfield and, more importantly, brownfield extension.
So the brownfield that you mentioned, there's a lot of M&A activity, which is an interesting way to invest because it's a little less risky, and it's seen that it's somewhat established.
Correct. Globally, there's consolidation in the big names in gold to ensure that from an index perspective and their resources, you've seen that the largest to date, I think, was the Newcrest. But what you're also seeing at various levels is people are acquiring the asset or the company because there's more certainty with regards to the feasibility study, the drilling program, some of the early work CapEx, etc. And that makes it far less risky as against a true greenfields where you've got to do your feasibility, go to your bankable feasibility, you've got all the drilling, you've got to raise the equity, the exploration equity to do the drilling programs. And it's not certain that the grades and the actual resource is mineable in a profitable manner.
So that's definitely the better alternative for investors. And now just generally as a continent, do you see that Africa becoming a place that is actually taken far more seriously on the geopolitical stage? For example, at the G20, I was shocked when the B20, the Business 20, the Sherpa said that many of the companies who came to South Africa didn't realize the opportunities that were available in Africa. I didn't realize that it was 2025 and people were still unaware. But do you think that 2026 will actually be the year where there's global recognition of the importance of Africa's minerals?
Absolutely. I think there is significant interest across the globe from the East in China all the way now to the US to secure these minerals, particularly the critical minerals, be it copper, nickel, lithium, some of the rare earths, etc. So the spotlight is definitely on Africa, and there's huge investment potential, and we're starting to see that investment actually materialize. And we see it through the US funding certain programs, which then in turn invest, And China's been here for a long time. They're acutely aware of what is in Africa. So we do see that. But this geopolitical balance between the East and the West, I think it'll be very beneficial for Africa because they all need these strategic resources, and you can't share them from a geopolitical perspective. So you've got to secure them now, and cash has to go in at this point to actually get the control or at least a strategic position that gives you some level of influence.
Well, I hope this is also the year that African citizens as well as governments actually grasp the benefit or feel the benefit of those resources. Thank you so much, Craig Brewer, Managing Director for ABSA Investment Banking.